Okay, guys, it's November 1st. We're in a new month. I want to finish off where I left off at. My last video I posted was if you're serious about trading, watch this beginner to advanced guide. This is going to be part two. That was a part one. This is part two because unfortunately the video ended sooner than I expected. I guess the capacity for the video that I was recording, it didn't allow it to run off a little bit later than it did. So this is a part two of if you're serious about trading, watch this beginners to advanced guide part two. So it's Saturday, November 1st, and a few of the things that I wanted to go over in this video is going to be I spoke about, let's see, I'm going to check the list. Okay, so the last part that we left off at was mistakes or failures. Let's get to mistakes and failures. I'm gonna share my screen, my TradeZella screen, so that we can take some time to look at this together. Excuse me. All right, so mistakes or failures. This is the what I want to speak about. I'm gonna tie this a little bit into maybe in the end of the conversation, I'll start talking about certain things that I look into, such as imbalances in the market, because I think that that plays an important factor too. It's a mixture of almost everything, but being disciplined enough to have enough patience and wait until the right risk to reward shows up in the market so that you know whether it makes sense to take the trade or not. Take the chance and risk your capital or not for the trade idea. Or yeah, um, some people call it case study. Case study is just a trade idea, so that's what I would call it. I would call it a case study because it's something that you want to think about so that you know if it makes sense or not. But mistakes or failures. So common mistakes that I've had as a challenge or still see as challenging. What I would do is I would sometimes I would hold on one second. Creating something, yeah. Okay. All right. I don't know, but I'll be there. Yeah. Had to pause the video. Okay, so I just found out that I have less than 20 minutes to create this video. All right, so let's make it quick. Mistakes or failures. Common mistakes that I'm currently facing till this day is I'm working on and I'm improving accepting the risk. So what I mean by accepting the risk is and committing with full commitment. I'm gonna put with full commitment. Honestly, don't even know how to spell commitment, but I hope that's how you spell it. Really doesn't look like it. I can just search it up. Oh, guess I spelled it right. All right. So accepting the risk, meaning with full commitment, that is when you say, okay, I'm gonna risk whatever, 1%, which could be what, $50 on your account's equity. And if it hits, if it hits my $50 stop loss, then it'll automatically remove me. But sometimes I'm looking at the different candlesticks that are playing out on different time zones and stuff like that, or time frames, and then I decide, you know what? Let me just take myself out and like cut my losses short. But then, the trade idea, it starts moving in my favor without me. And then I re-enter. But so that messes up your journal because now what you're gonna see, what I personally see in my journal is I see that I've taken more trades for the week, which my whole purpose in journaling and improving myself as a trader and also as a person is to cut down the amount of trades that I take on a weekly or daily basis. So that interferes with my data. And when that happens, sometimes I'll hop back in the market and start trading again with the same idea, but now my risk might be different than it was before. I might have entered down here on the first position. I closed maybe in drawdown. I closed in drawdown, but I chose to re-enter at a different price, which is much higher than it was before, but now my risk is different, which means that my risk to reward is different as well. So you have to be mindful of specific things like that. That's personally the things that I have been mindful for. So I just assume that, if I'm facing these certain things, I think that other people are facing the same things as well. And what else? I mean, I wouldn't get too, actually, before I say that, I'm gonna go through imbalances in the market and which are just things that I personally look out for. And so far, I mean, mistakes or failures. Accepting the risk of full commitment, we just went over that. Risk to reward. So, what is your R to R? Okay. What's your risk to reward? Making I For A plus and B plus setups, I make sure that I'm not looking for anything that's lower than 1 to 3. If it's a 1 to 3, I'm gonna consider it. I might consider it. If it's a 1 to 2, 1 to 1, I'm not even gonna waste any time on it as a B plus or A plus setup. Um, Another mistake would be I would say placing or allocating risk differently on Sundays, regardless of if the market presents an A plus case study. That's just something that I personally chose not to do nowadays. Um, I just found that no matter how good the trade looks, a lot of times I'll get wicked out on like a Monday or Tuesday or some different day throughout the week. Many Sunday highs and lows get taken out. Not always, but with my back testing, I've seen that. I've noticed that. Um, I would say mistakes or failure. Mistake. Mistakes would probably be other mistakes that I would probably consider is not, I would say disregarding higher time frame, getting a call 1 second. So disregarding higher time frame, you know, higher time frame I would consider higher time frame as 4 hour daily time frame, weekly time frame. I don't really focus too much on the monthly time frame, but it is something that I do think about, just not often. Um, so yeah. And the more time frames that you can find in sync with each other is obviously an indication that there's a very high probability of the trade going in your favor, according to your case study. Um, I don't know why I put a dash there. That's the same sentence. And what else? Other mistakes or failures? I would definitely agree on the fact that I've seen myself and still see myself many times being impatient. Um, I'm actually more patient than I was before, like way more patient than I was before. But this is still something that I want you guys to look at. Been working on this, and if you guys have been watching since last year, I think November, December, when I started doing the YouTube videos, you'll see that I became more patient just by the amount of trades that I used to take. I used to take, 60, 50 trades per week. That's been cut down if in half, if not less than half. So I would definitely be mindful of your patience, right? Lack of self-control as well. Lack of self-control. I think lack of self-control though is intertwined with being impatient. So accepting the risk to reward, allocating risk differently on Sundays, regardless of it, if the market presents an A plus or B plus case study disregarding higher time frame. That is a mistake. Is disregarding higher time frame. You want to regard higher time frame. Have some respect for, it's almost like saying have some respect for your elderlies. Have some respect for the elderly people that walk on this planet. There's a quote that I go by. It's the the young man walks the path faster, but the old man knows the road. So just having these the mental blocks in your mind so that it allows you to move through the maze with, it's almost like footprints that you're walking through this maze. So the path is kind of already built for you. So you see these other turns throughout the maze, but you're just following the footprints to get you into the right, direction, or, get you to the right destination without wasting time and money. Wasting time and money I see is the paths without the footsteps because they may lead you into a direction that is off topic, off track, and things that are off topic, off track is not an IPA. Colleagues and I would say IPAs are income producing activities. So income producing activities is what you want to focus on. But if you're wasting time with all this extra stuff, then it's not gonna really it'll be meaningless many times, or if not meaningless, it's just very unhelpful. So yeah. I'm gonna discuss now imbalance, and then because I think this is something that I definitely see as helpful in my trading, and if it's helpful in my trading, I'm gonna just share it with you guys for full transparency. Um, Many traders in the space, they like I don't know, it seems like for some reason it's hard for traders in the space to be fully transparent, but I'm not sure why information like this isn't being shared. Um, Openly. So as you can see, when imbalances are met, many times there's, if not rejection, it acts as a support many times. So this would be an imbalance, this would be an imbalance, or I was taught that that's an imbalance. So it's just insufficient, um, not balanced. So imbalanced price. If there's too many buyers in one areas and not enough sellers, many times it'll attract price and then revert back to the direction that it once was headed. So even here you can see that there's imbalance. And then once you drop to higher or lower time frames, and look for shifts in the market, it'll help give you your risk to reward that you're looking for. And it should, even after market dropped into this imbalance right here, it came back to fill in a lower imbalance down here and then started going up into a better or giving buyers in the market a better risk to reward than here. So like if you were to take it here, the market stretched from around this point on to here, generating about 100 or 1,550 points. But from here, you can see how much profit whoever held, if anybody held, it's gone from way down here all the way up to around 14,000 points. So is that the number that we're reading? I don't really read this with this tool. I don't really find it that important on my radar to be used, but only main thing that I like to use on my radar is gonna be just the risk to reward tool like this right here, so that I know, what the risk to reward is. But yeah, as you can see, 1 to 3, 1 to 3. If I were to shorten it, it'd be like a 1 to 1. But yeah. So that's imbalance, and you'll have imbalances on every time frame. Obviously, the higher the time frame, the higher probability the market will go into your direction. Because usually, before price wants to go in your favor, it'll drop down to an imbalance many times, accumulate, manipulate, and then start distributing. So right now, this is where the market's at. And yeah, but yeah, that is mistakes or failures that are commonly my common mistakes or failures. What I wanted to talk about with you guys, and I have less than 4 minutes, is just a few quotes. I'm gonna run through it real quick and then I gotta go. Um, okay, so based on everything that I spoke to you guys about between the my last video and this video, part one and part two, I think it doesn't matter what you trade. It doesn't matter if it's SMC, trend lines, support and resistance, ICT, ICC. Doesn't matter if you don't like, it doesn't matter if you have the best strategy, like without proper risk management, I doubt you're going to be a successful trader. With improper risk to reward placements, without, improper risk management implemented into your system, it's very unlikely that you're going to be a successful trader. There's a few quotes from books that I've read that I wanted to just keep in mind. So let me read a few of those to you. One of them are Discipline is the bridge between goals and accomplishment by Jim Rohn. He's talking about how most traders focus on setups, not the discipline to stick to them. That kind of correlates with um what I said, which is accepting the risk with full commitment. So that applied to me and many other traders, obviously. By Mark Douglas, Mark Douglas says in trading, the hardest work is emotional and not technical. And that's true because, like I just said, you can have the best win rate But if your risk management is cooked, then it's going to be hard for you to be long-term successful. It could take you 5 years to build up your capital to now start, trading with a $20,000 account or $100,000 account. But you can blow it overnight. With the, high win rate, you can still blow overnight because you didn't use proper risk management. The market does not beat you, you beat yourself. That's Larry Height. This is a connection to self-sabotage and revenge trading. Um, if you can't measure it, you can't improve it. That's Peter Drucker. So that goes to show you that, whatever you're not journaling, if you don't have data of what your system entails, there's no way to really know, genuinely and truthfully know, where you should allocate risk, how much risk how much risk makes more sense to allocate with certain setups and certain case studies versus another. So you kind of want to juggle risk. Once you start learning how to juggle risk, no matter if it, again, trend line, support, resistance, ICT, SMC, ICC, really doesn't matter. It's all we all have a main objective. Main objective is obviously to profit. I doubt there's anybody in this space that's looking to intentionally lose money. I think the overall goal here, the objective is to build your capital, grow your equity. So with improper risk and not knowing how and when to allocate risk, it'll just leave you down the rabbit hole of just losing money. That's really what it is. So I'm gonna leave it here, and again, I have to go, but I hope you guys learned something or a lot from these two different videos. Hopefully this is all you need to start, building your capital and scaling your account between part one and part two. And if this was helpful for you guys, remember to leave a like, comment, subscribe. Um, who knows? Comment below what your mistakes or failures are. Maybe there's something I left out that you're maybe struggling with right now or have struggled with in the past. Many traders that see this video are looking for, what not to do. So that would be helpful for other traders that come across this video to look at. So thank you guys, and I'll see you guys in the next video.